Hi guys, today's video is on the statement of financial position, which is the third statement that you need to know for ACC. First of all, the heading is very important. Statement of financial position of the name of the business as at and the date. So three important things: name of the statement, name of the business, and the date. What goes into this statement? Assets, liabilities, and equity. So we're going to start with assets. You need to make a heading called assets. Then the assets are split into three categories. You have non-current assets. Then you have current assets. And then you have financial assets. So there are three subheadings under the assets heading: non-current, current, and financial. Okay, so what type of accounts go under non-current? It's all the assets which you're going to use long-term. As an example, you'll have equipment. Another example will be vehicles. So those are two non-current assets which I've listed over there. Then you have your current assets. I'll give you two examples. The most common one is bank, and then accounts receivable, which is your debtors. Okay, so we've listed two non-current, we've listed two current. Financial assets are like your investments or fixed deposits. So I'll make one account over there, investment. If you had a short-term investment, which means it's going to mature within 12 months, it would be a current asset and not a financial asset. So financial assets are long-term investments. When you're done writing down all your accounts, you have to have the amounts next to it. So I'm going to make up amounts for each account. Let's make equipment 10,000 and vehicles 10,000. You put a block around all your non-current assets. You add it up and you put the total next to the words non-current. Then you'll do the same thing for bank and accounts receivable. You'll add it up and you put the total next to the word current. And then you'll do the same thing for financial assets. You put in your total for investment, you put a block around it, you total it up. When you are done listing all of your assets and you've put in your three categories, you can then add up all your assets, and then we have the words total assets. What is your total assets? It's your non-current plus your current plus your financial. So those three amounts together will go into total assets. This is the top part of your statement of financial position, which is the asset section. You then move on to the equity and liability section. So again, you're going to have a heading, equity and liabilities. The first subheading under this will be equity. Then you have a subheading called non-current liabilities. And then your third subheading is current liabilities. Okay, so there's three subheadings under the equity and liability section. There's equity, non-current liabilities, and current liabilities. So what is equity? Equity is the closing balance in the statement of changes in equity. So in the previous video that I've done, we've done the statement of changes in equity. The total there is what would go here. Okay, so whatever that total was in the statement of changes in equity, you will put here. That is just a transfer from the statement of changes in equity. But non-current liabilities, an example there would be a loan, a long-term loan. Whatever the total is there, you put next to the word loan. And then an example of a current liability is accounts payable. That is your creditors. The total for the accounts payable, you'll put over there. So three categories: equity, non-current, and current liabilities. When you are done, you'll follow the same format as your assets. So you're going to block all of the non-current liabilities, add it up, put it at the top, you're going to block all the current liabilities, add it up and put it at the top. When you are done, right at the bottom you'll have total equity and liabilities. Okay, so in order to calculate that, you're going to say my equity plus my non-current liabilities plus my current liabilities. Those three together will give you your total equity and liabilities. Once you are done with the whole statement, you must make sure that your total assets and your total equity and liabilities are equal. So the amount that you have by total assets needs to be the same amount for total equity and liabilities. And that would make your statement of financial position balanced.